Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen the buy side really step back in, and at this point, ES has broken out above yesterday's RTH high of 2051. And heading into the open, we know that the buy side is in firm control. The overnight session has been quite bullish. Now, the challenge with today is that the market has already moved a pretty decent amount. Not to say that it can't go higher and tag 56 to 58 or 60 quarter to 62. But when the market has already put in a fairly large move, it does make it more challenging to get involved. And in order to get involved at these higher prices, we will need to see sustained upside momentum. So we know that, this 48 to 50 area and 51 are areas of resistance that have at this point been taken out to the upside. That's where the market balanced in the overnight session around the 48s and 49, and then it broke out to the upside. So now the question is whether the market can sustain that breakout right from here. And in order for that to happen, we need to see sustained broad market momentum. That can take us up to 56, 58, 60 quarter to 62, and depending on the relative volume and the level of broad market strength and momentum we're seeing, we could possibly even go up and tag 65 to 67. That would mark a range extreme, so that's a bit of a stretch. But 56 to 58 is very much within range, and it's an achievable target to the upside as long as we can maintain this strength. Now, in the event that the market, at least on the smaller time frames, doesn't hold above 48 to 50, the overnight breakout area here, it doesn't necessarily mean that we have to reverse and crash back down. Given how strong the overnight session has been, given the fact that the bigger picture is still bullish, even after yesterday's downswing, it was still bullish, and overall we are trading within a range and a balance. The buy side can still be active at pretty much every zone on the way down. So in the event that we fail to hold 48 to 50, 43 half to 45 half, perhaps exercise some caution and look for some real-time reason and justification to get in. But the conservative zones at 38 half to 40 half, for example, 34, 35, the overnight low, although it's very unlikely we're going to get there, but the 25, 27, those are all areas that continue to be valid support. Now, given how strong the overnight session has been, ideally you don't want to see it breaking below 38 half to 40 half, and ideally you don't even see it breaking 43 half to 45 half. Typically when you have this much directional conviction in the overnight session, usually you get follow through, and the short-term trend continues. But we just have to keep in mind that we are trading at technically resistance here, right? Yesterday's high, 51. So the fact that the market's already moved from 30 quarter all the way up to 52s, that's what makes it challenging. It's that a big move has already taken place, and you have to wonder how much more is left. Now, like I said, 56, 58, 60 quarter, 62, those are spots that can be tested. And, that's still technically 10 points away, but let's say you're opening at 53 or 54 to the upside. That would make it quite challenging. And in that case, there's simply not enough reward to risk to justify getting involved, and you don't have to chase. Today's just one day, and if that means not taking even a single trade, if the market's not giving you at least somewhat decent location or a clear signal of upside momentum, and the reward to risk is questionable, then it's okay, right? It's just one day, it's just one trade. It's not going to make you or break you. So then you have to wait. And that might mean waiting for the market to really get exhausted into a good resistance zone, and then perhaps shorting that and taking 2 or 3 R out of the resulting rotation. So that might mean waiting for the market to get up to 60 quarter, 62, or 65, 67. Allow it to get short-term exhausted into a zone, whichever zone that might be, and then play the counter rotation for a reaction. So what tactic we use is going to depend on how the market develops. But those core ideas of reward to risk, process driven and rule based ideas, those have to be applied consistently on a daily basis. And you don't want to chase a market simply because you feel like you've missed out on a sizable move. It happened here in the overnight session. Can't do anything about that. So if you're not trading the overnight session, then it doesn't matter. The main thing that matters is that we closed at 35, the overnight low is 30 quarter, and now we're opening about 20 or so points away from that. And if the market provides a good spot to get in and the underlying conditions are what we want it to be, then 48 to 50 and 51 could be used as a spot of entry. But again, it's going to have to depend on that sustained underlying momentum idea. But clearly the buy side is in firm control, so we want to be careful getting aggressive on the short side as well. The larger time frame bias continues to be neutral bullish. The short-term bias here is fairly neutral. The overnight bias is quite bullish. So when you take all that into account, we just have to exercise some caution when the market's trading at a very aggressive price and it's already moved 20, 22 points. And like I said, if that means letting it go, that's okay. But the way this market's setting up right now, if we can hold above 48 to 50, then 56 to 58 would be a very achievable target. Even 60 quarters, 62. Beyond that, you really start exhausting the range, and I don't think it's going to be as easy to get to 65, 67. Is it possible? It could happen today, but it's a bit of a stretch target. The more achievable targets are 56, 58, and 60 quarter, 62. And on the downside, pretty much any support area can technically involve and attract buyers. So those are the main ideas heading into the open. Let's see if the buy side can really maintain the strength we've seen here in the overnight session, and we'll take it from there.